Hey there, welcome to the College Investor Audio Show. We're so glad you're hanging out with us today. You can check us out at thecollegeinvestor.com or follow us and like us all over social media. We're pretty much anywhere you are at The College Investor. Today, we take a look at a Fidelity study that reveals some changing views on student debt. Let's go ahead and dive right in here. Yeah, a new Fidelity investment study finds that economic conditions over the past several years are influencing how high school students plan for life after graduation and what they're willing to pay for college. Interesting. More than half of them said living through recent financial instability has kind of changed their thoughts a little bit of higher education, prompting many to focus on affordability, career readiness, and long-term financial security. The survey, which polled more than 2,000 students, by the way, and parents, shows a steady increase in the percentage of college-bound students prioritizing cost when choosing where or how to pursue higher education. In 2025, 47% listed cost as their most important factor, up from 40% in 2021. Among high school seniors, the figure rose to 54%. Career outcomes weigh heavily, too. 65% of students want a job in a field they care about. 61% seek salaries that support long-term goals, and another 61% aim for stable careers. These numbers have climbed since 2021, when fewer than 55% rated these as top priorities. While most still do plan on a traditional college route, interest in alternative paths is growing, and I think that's a good thing. The share of students considering vocational or trade school as their primary option has tripled since 2021, just a few short years ago, from 2% to 6%, though still a clear minority. Parents adjust savings amid market volatility, too. Parents are kind of rethinking their approach a little bit. 60% say they worry about market uncertainty affecting their ability to pay for college, but still, nearly 3/4 are continuing to save. Among those who change their strategy, the most common steps include reducing savings amounts to 45%, rebalancing investments to manage risk at 31%, and using savings vehicles beyond 529 plans, which is a good idea too. A majority of parents, like around 70%, say they feel grateful to have set aside some funds for college. More than half also feel optimistic that savings will enable their child to pursue higher ed and accomplished for meeting at least part of their savings goals. Use of 529 plans remains strong too. Over half of parents either currently are saving in one or they're at least planning to. These tax-advantaged accounts can be applied to a wide range of education expenses, from college tuition to certain apprenticeship costs and even up to $10,000 in student loan repayment. Pretty awesome. Debt expectations don't match reality. The study also reveals a potential gap between what families expect to borrow and what they actually might face. Students estimate they'll graduate with like $16,000 or so in student loans. Parents put the figure at like almost $18,000. Parent debt expectations are slightly lower too, at roughly $16,000 by their own estimates. Given that a single year at an in-state public university now averages $30,000, a family covering even half the cost with loans could be looking at closer to $60,000 in debt by graduation. Plus, our data shows that the average student loan debt at graduation is like $37,000. Ouch. Loan repayment timelines are another area where expectations may be overly optimistic here. Students predict it's going to take 9 years to pay off their own loans and 7 years to pay any parent-held debt. Parents estimate 10 years for student loans and around 7.5 years for parent loans. Both groups expect monthly payments of more than $500. The reality is, the average undergrad pays off their loans in 17 years, and grad students over 20 years. That's like a mortgage payment. The assumptions families are making on student loan repayment are half of the reality. But encouragingly, discussions about how to pay for higher ed are common. 67% of students, 70% of parents do report having the conversation, with the share rising to 75% among seniors. Pretty cool. We believe that having these open, honest conversations is critical to making better college decisions. It's worrying, though, that 1/3 of families are still going into college blind on the finances. What to think about as you move forward? The Fidelity report suggests a gradual but significant shift in how families approach higher ed. Students are weighing cost and career outcomes a little bit more heavily. Good. And parents are adapting their college savings strategies to economic conditions without abandoning long-term goals. Another double good. A lot of families have aligned expectations, too. The data highlights the risk of underestimating future loan debt, though. So as conversations about cost, value, and repayment become a little bit more commonplace, both students and parents may be better positioned to make choices that balance educational ambitions with financial stability. If you have any questions or comments or concerns about how you can make better choices that balance your ambitions with your stability, check us out at thecollegeinvestor.com. Follow us, like us, and all the things on social media. Search for The College Investor, you'll find us. Thanks again for stopping by today, and we'll talk to you again real soon.